The Tesla of furniture, in my personal opinion. And I just bought before the earnings some calls in additional to my position. And what happened, the stock went up 30%, guys. The last two earnings were positive profits. I cannot comprehend why Wall Street is underestimating the earnings of Lovesac. Let's talk about a stock that I really like. The Tesla of furniture, in my personal opinion. It has the brand, it has the team, it has the founder, it has the names and products that really I like. The direct distribution, the growth, the innovation. I mean, they are doing things right. And still, they are such a small company, about $1 billion in market cap. And again, you know, as always, the earnings were absolutely fantastic. We will talk about why I love this company. We will talk about the earnings and we will talk about the stock chart. So stay till the end. And if you want to have the stock tips a little bit earlier than I'm making these videos here from time to time, then join the Discord. 50 thanks, the 50% off for Christmas, and you will get access to all of this because I posted this just before the earnings. The earnings were a couple of days already ago and the stock absolutely crashed again, the earnings. I cannot comprehend why Wall Street is really underestimating the earnings of Lovesac. They deliver a surprise after surprise after surprise, and the last two earnings were positive profits. And still Wall Street is saying, you know, we think that this company will not make any profit. So this is obviously always this huge pushes into the stock price, and this is what we saw here in the beginning of the month. So it started here with a pretty much low of 58, and I was thinking like, this is a great buy before the earnings. So I was watching it, obviously it went a little bit up, and I just bought before the earnings some calls in additional to my position. And what happened, the stock went up 30%, guys, which was unbelievable, fantastic. And what happened then is basically that after that, the overall market went down, as we know, right? S&P, Tesla, everything went down. So they obviously fall. And now, and basically everything, they lost everything that they gained. And now they are recovering. Just as of day before yesterday, they jumped 5%, and the market cap is at about $957 million. Now, I still believe that this company will grow 10x over the next years. They have the products, they have the distribution, they have the pricing, they have everything what you need. The growth and the profit margins are absolutely insane for furniture. And if you're looking again 6 months back, there's something exactly the same happened here when they launched the other earnings. And this was, again, I posted it in my Discord, and next day or next days, it absolutely blow up with about 50% gain over a period of 2 weeks only. This is with options, obviously 2, 3, 400 gain in percentage. So forget about your shitcoins and come on the side of stock options with mind, okay? You have to have the right mindset. I'm not a big fan of jumping on trends or anything, but you know, great companies like that with earnings plays like that is a really easy money, guys, okay? But this to the side, let's dive into the earnings and the stock chart. Make sure to subscribe and like, and let's go. So they usually start with the earnings report in the really early hours of the trading day. So on the 8th of December, they actually launched their earnings numbers for the third quarter fiscal 2022, and those are the results. And guys, if I wouldn't know which kind of company this is, I would say this is easily a great run, fantastic software or technology company, okay? Those numbers don't at all, in my head, associate with kind of furniture. I mean, if you're thinking like furniture, you're thinking like, okay, very hard business, very low profit margins, much need to be done, in Asia to be competitive and so on. But Lovesac is totally changing the game with having one product that is changing the sofa world and is really so adorable and for families, and the pricing is super premium, but still people are buying it. They cannot sell enough. They have their own stores in New York, in every big mall. They are still only in the US, so still huge opportunity to grow internationally. So this is a great company to have in the portfolio. Okay, but let's dive in. So strong momentum across channels drives 56% growth. This is more than Tesla grows year over year. Okay, just to make sure what we are talking about here. Then they have the comparable sales is 47. And they are having a net income of 11% to 2.8 million. That is really great. And third quarter EBITDA of 5.8 million. This is a great outcome. And here you can see our results for the third quarter reflect strong, sustainable, and profitable growth across all sales channels, including most notably an increase in showroom sales of nearly 70% and nearly 40% increase for internet sales. So even though we are in the, let's say, last breath of this health crisis, which gave this company a huge push, specifically in online sales, you still have this crazy sales growth in their showrooms and so on. What I want to go further is if we are going into the profits, okay? You can see here that the profit margins were quite insane, okay? 56 or 41 respectively was absolutely insane. Here you can see also this is the 9 weeks ended, is even a little bit more in terms of percentage. But however, you see the huge profit margins here on this business. They also say that they have a great marketing that for every dollar they spend, they have really great money that comes in as revenue. I think like 30% or even higher. I have to look up the investor presentation, but they have a really high number of returning customers as well. So this is great. So once they have a customer, then they actually increase that sales per customer on a long-term basis. Here you can see also showroom count. They increased 30 more showrooms all over US, which is also fantastic in terms of growth. So with those numbers, I will not bore you with that because this is something that you can go with yourself. And then you see from time to time this crazy numbers. The increase in showroom sales was driven by an increase of 133% in comparable showroom sales, and that's really great. More and more showrooms are open after the health crisis as well, which gives that obviously an additional pump. So let's dive into this stock chart of this beautiful company. As you can see, there is a couple of things that we need to discuss. Let me just kill some of those moving average, because what we really need are those two, okay? And actually there is an issue here, okay? There is unfortunately an issue because we have a very bearish outlook here, okay? What happened was we somehow play along the 50 moving average here back in the June months. Everything looked fantastic, freaking fantastic, cannot be better, okay? Stock went to all-time high at 91. We were above the 50 moving average, we were above the 200 moving average, but then with the sell-off on the overall market going into autumn, we crossed the 50 moving average, which then triggered like a bearish sign. This stock is still very volatile, obviously, because it's so young and not many people see this gem. But then you see here what happened. The 50 moving average then went obviously down with it, and now we were in this fighting stage over the last, let's say, since the mid of November, where we crossed the 50 moving average, which gave the stock a very bearish outlook, and then great opportunity, right? The great opportunity to go and fight this and go back, and we did it. We crossed the 200 moving average and the 50 moving average and settled somewhere at the recent highs of 82. But then, you know, with the market sell-off, with the overall tempering talks of the Fed that, you know, there will be rate hikes, even 3, that was too much for this very volatile stock, and we moved below those both, which means that there is room to go down. Okay, there's definitely room to go down, but look at where we come from. Okay, just in the beginning of the health crisis, we were at $4, guys. Okay, $4, $5, $6, and now we went within like 2 years to 90. So give the stock a little bit of chance. But after more and more of this unbelievable story success of this company, I really like to buy here on the way down, because this gives you just the better average. The good news are coming in, there's no bad news, so I really like this company, guys. Check it out. Let me know in the comments below what you think about this company, and we can be both holders of Lovesac. Obviously, this is never financial advice. Make your own research, and I see you obviously tomorrow for Virgin Galactic Friday.